Good morning, everybody, and I'm very excited to be able to moderate this panel because we're going to focus on the customers. End users who used to be at the end of the chain, but not anymore. Today, the customers, they set the rules. They are defining contract structures, product design. And we're seeing three important shifts. Number one is that regulation is forcing transparency in the chains, especially for batteries, and I'm sure that this will come up in the panel. Number two is the markets are volatile. Everybody has talked about the uncertainty. And number three, geopolitical risk is real, is something that we need to navigate. So our goal for this panel is very, very practical. What can customers do now? What can they do on contracts, on standards, on collaboration, on really fostering innovation and investments and doing that in a reliable, in a responsible way? So I will ask some questions to our panelists around how the customers are shaping, how also procurement rules are defining the rules of the game, how contracts and capital allocation can be fostered and what role customers can play in that, how we can get resilient chains, and finally, how we can get broad collaboration across sectors, public, private, and so on. And to help us unpack, I am joined by our five panelists, Saleh, Alsaleh, the Vice President of Aramco Transition Minerals, Joe Kaeser, the chairman of the supervisory boards of Siemens Energy and Daimler Trucks. We have then Dr. Klaus Kleinfeld, founder and chief executive of K2 Elevation and chairman and member of boards in tech and healthcare. We have also with us Dr. Fadi Trabunzi, the MD of Advanced Metals Industrial Cluster, who are very well known for titanium alloys here in the kingdom. And finally, we have Marc Winterhoff, who is the interim chief executive officer of Lucid, whose cars we have also seen around here. So thank you all for joining the panel, and let us start with the customers as shapers of demand signals. And I will start with you, Saleh. Of course, the question we have is Aramco, oil, moving into minerals. When we talk about customers, which customers are you trying to serve? And why?
Very good. Thank you, Karel. That's a good question. Why Aramco is into mining? And I think I'll start addressing that point first before we talk about the customers. So we, as you all know, we've been operating in the kingdom for over 90 years, accumulating very large geological and geophysical data sets and developing very advanced AI, data analytics, and high-performance computing. And most importantly, we have very competent geologists and geophysicists that we've been using for decades for oil and gas. But lately, we also have seen potential of finding minerals and also in oil field brines, such as lithium, at very encouraging concentrations. We reported, in fact, in this very forum last year, four times the commercial limit where lithium reached more than 400 ppm in some of our aquifers. So combining the prolific lithium resource with our advanced drilling and subsurface mapping, we think we can be a player in the lithium space, a low-cost producer. And for that, we've been working actually with customers in the manufacturing side and then so the battery makers to align our plans with their requirements and the quantities that they need. And this is a very important step, and I think we're going through it right now as we are working on the exploration phase and the demonstration phase. We're also talking to the customers to align the pace of the development, which is a very important point here, is at what pace we should move. And that really will stem out of very effective discussions with the customers. So actually, in parallel to such discussions, we've been busy also recovering lithium from our brines. We deployed several pilots in the field, showing very promising results from direct lithium extraction technologies. So to sum it up, I think talking and working on our strengths in the extraction of lithium, working on surface to find the greenest technologies to recover lithium with the lowest footprint on surface, and aligning with the battery makers and car makers is very important as we are going through it as we speak.
Very good. Thank you very much. Let's go to the other side of the panel, to the buyer, right? Because the word is out, lithium. So you as a buyer of materials for your cars, how do you send the right demand signal to your suppliers, especially in a world with a lot of uncertainty?
Yeah, I mean, actually, in the back room, we already shook hands, and Saleh and I, working on, maybe offtake or things like that. So it's very, very important, obviously, to have the contacts to the right people. But how are we sending this? I mean, we know that it's a bit of a chicken and egg problem. Yeah? Unless there's an offtake, unless there is a buyer, there's no investment, and therefore we are willing to give long-term commitments, mainly around volume. But it also has to have flexibility, because I mean we have all seen this in the last couple of years, particularly us on the EV side. It is a little bit of an up and down, and so therefore we need to have flexibility. And the same thing is, well, the batteries and the chemistries are changing, but they're actually not changing that fast. We need to look very much forward, because it takes many months, if not years, to qualify everything in a perfect way. So what we typically do is, we have volume agreements, very much forward, looking many years, and then, basically require some flexibility.
So maybe another customer, Joe, Siemens, Energy, Daimler, trucks. We talked a bit about the automotive industry already, but also in energy, there's a lot of uncertainty. There is a lot of questions around scope, timing of energy transition, and so on. So how do you handle this? How do you think about the demand signals to your customers?
Well, I mean, first of all, thank you for having me. I can tell you the Future Mineral Forum has never been more important than it is today. So why is that? Well, because those so-called commodities, minerals, used to be readily available everywhere. Today, they are one of the scarcest goods in the supply chain of this planet. So this old saying, saying if on your way up, be nice to people on your way up, because you all meet them on your way down, is very true. What I'm trying to say is that the minerals today basically are the leverage for all the products, from AI to software to energy to automotive to everything, to technology. And that's why we are very much focused on securing the supply chain, not just by having a supplier and us being a customer, and then we negotiate, and then we'll find a price and then a delivery time. No, that has changed. Today, we are going to our suppliers and try to find long-term partnerships, working together, not just in the supply, but also in enhancing technology, innovation, to make sure that the resource consumption goes down. Why is that? Well, in the electrification age, which we are currently actually only entering, so it's only the beginning of the electrification age. So if everything is electric in this world, all the mobility, everything, we would need 7 times the mines which we have today. 7 times. And so that actually is not feasible, because it takes 10, 15 years for permits and this and that. And the resources are obviously not there forever. So we need to bring technology and innovation into the supply chain area to make sure that the efficient use of minerals is also be secured. So the game has changed from, supplier, customer, pricing, negotiation, off we go, to long-term secure of supply chain and partnerships. First thing. Second topic, geopolitics. Not sure whether the free world trade is going to continue as we used to know it. Maybe it's going to be different in the future. And we need to be prepared for that. And that's why our solution is vertical integration, supply chain partnership instead of negotiations on pricing and terms. And that's what we believe secures our innovation power, our reliability, and then last but not least, the resilience on supply chain management.
Yeah, I said the panel would be very practical. I think these were a number of very practical actions that you shared. Let's go to the kingdom and to you, Fadi, because when we're moving a bit more to the rules of the game in procurement, in establishing the relationships in the value chain, you have had an amazing development story with AMIC over the last years. So the question I have is, how are your customers that are very advanced customers across the world, how are they pushing you to do better, to do certain developments? How does that work?
Thank you, Rick. The integration of the value chain, as mentioned, is a key topic that is being debated. If it is really necessary to happen, or industries, especially in this business, can rely on diversified sources of supply of feedstock. Because that diversification is one of those success factors that, in addition to the wider customer base, will help business to survive. And we have here during the sessions and different roundtables during this great exhibition that survival is key to this business, because it is, as we know, capital intensive. It requires time to develop. It takes long-term commitment from all of the stakeholders of these projects. So it is very important that that relationship is fixed between the feedstock supply and the end customer. And this is where price and cost are the variables that can be agreed between the different benefited parties in the total value chain. Of course, as a supplier of the material, I need to be competitive, and as well as a supplier of the base metal. And in titanium value chain, this is what we have done in the kingdom. We have invested in the last 10 years, 12 years, a lot of efforts and capital to develop that industry. It took time and efforts, where specific efforts by AMIC and Tasnia were put into this. But also we have capitalized on the mineral experience that the kingdom has developed in the past 2 decades in aluminum and phosphate and gold, for example. But what we have learned that titanium has its own specific needs in the processing, in the final product. Because as we know, it does not only go to aerospace, it goes into medical and industrial applications. So we think that we continue to evaluate this vertical integration option, but what is key here is that we continue sourcing the feedstock of material through the value chain and be consistent in the product that we make and supply to our clients. These, what we believe, are the 2 key factors that we need to maintain all the time.
Yeah. So this, I think, brings us to now, how do we pay for all the ideas here that were shared? So when we think about capital allocation, when we think about investment, maybe I come to you, Klaus, given your long experience as an executive, but also now as an investor. So when you're thinking about like investments, and thinking about structuring the contract. We heard also, Marc, you were talking about like, well, you need to have a customer confirmed, yeah, maybe offtake puts that really in writing. So how do you think about like investment in as de-risked way as possible? Like what needs to come together?
Yeah, I mean, first of all, investing in commodities is not for the faint heart, right? So, because as you said before, it's highly capital intense and it needs a long breath, you know, because there are some cycles that you cannot avoid. So the really good commodity investors do two things. One is they figure out at an early point in time, where are the nuggets? Where are the nuggets? It's exactly, I mean, the opposite of, or the counter position of, Joe, what you would do in a company. You know, you look at how easy is a certain goods available in the commodity markets on the one dimension, and the other dimension, how strategically important for my competitiveness is it? And you look at which ones are the ones in the future, not just today, you know, because today is easy, you know, you need to have a look into the future. What are the critical ones? And then you have to figure out, you know, can I replace them? You know, can I potentially invest in a mine? Can I partner with somebody? Can I form a relationship inside of the industry to work with others? You know, so all of these things. So, and the commodity investor does the same thing because we see the counter position of that, you know, and try to find out where are these future hot spots, you know. Geopolitics obviously has become a gigantically important dimension in this, right? It was never not a dimension in commodities, but today it's an additional one. It's not just about, is it a war zone? How secure is my contract? It's actually how much in favor is a certain nation at a certain point in time, or is there something that could trigger a response from our president to say, I don't like them and I put tariffs on them, you know, and that could be bad, it could be good for you. You know, it depends on which side you're on, you know. So that's the macro picture. The micro picture has pretty much stayed the same, you know. You basically, on the micro picture, you have to look at where are you on the cost curve. Where are you on the cost curve? Because in the end, you know, if you are low on the cost curve, that's your only safety net, you know, of staying through a low commodity cycle. When everybody, let's say when 80% are losing money and you still make money, that's a good bet, you know, but if you're in the middle of it, not so good, you know. So, and you have to look at how can that be shifted, and again, also geopolitics have come into that game. So that's basically what you see today. And then when you look at contracts, the contracts, you said a lot of these things. I mean, you have to look at, do I have an offtake agreement? How is the offtake agreement structured? Do I have fixed prices? The interesting thing is, and that's changing, and I'd love to hear, Joe, what you think about it. It used to be that these things were done by the procurement departments. And frankly, the procurement departments they always think it's commodity. So I buy a pound of titanium, I buy a pound of something. So for them, it was the price. That has changed. I think it has changed, particularly for those ones that are really rare and that are hot in demand, where it's now on the sea level. And you take it up and you say, because it's so important for my future, you know, I can get a competitive advantage or a disadvantage to this. You know, so, and now they are probably willing to do long-term, you know, fixed prices, where in the past, it's very rare that somebody was doing a long-term fixed price contract because they said, hey, you know what, yeah, the prices are high now, I make a fixed price which is below that, you know, but the moment it drops 30%, they say, oh, you know, I don't like this contract, you know, forget about the contract, I rip it up, you know, that has been the tradition there, and I think that's going out of the window.
Oh. So it's a very good framework, like the macro parts, the micro parts, and then how do you secure to get into the money with the project? Maybe to come back to you, Saleh. So when you are investing, like now within a group that is diversifying from oil to minerals, what are the minimum requirements you want to have from your customers? You can, of course, look for the low cost curve assets and so on, but like, what is the minimum requirement when you engage with customers for you to expand in the chain or beyond the current portfolio?
I think what will encourage us to move faster in the mineral space, because it's a new domain for Aramco, is long-term commitments. offtake agreements with end users like Lucid or other companies, battery makers, will encourage us, of course, to move faster. And I think we are entering into a long lead items. These mining projects, even direct lithium extraction or lithium, are capital intensive. And before we commit to larger scale projects, we want to ensure several things. I think it's not only about the geology. There are many factors that need to happen to come together. The end user long-term commitments, the supply chain, the geopolitics, the technology. I think another important aspect is where do you stand in the cost curve? Because the price, we've seen all what happened to the lithium price recently, being very high and then went to a low point and now rebound since for the past couple of months, but that's also not sustainable. So where do we stand in the cost curve is very important. And for companies like Aramco, where we invested a lot in technology, we believe that technology and AI and computing are our tickets really to lower our cost and be able to withstand tough cycles. So I think the long-term agreements, strategic partnerships with key companies are really a major enablers for Aramco, and I'm sure there are similar companies. And once we secure that, we have internal things to do. I mentioned lowering the cost curve, using our expertise and our capabilities and what have you, focusing on the prolific parts. And I think there is maybe another element that we haven't talked about is the environmental aspect. The way that we produce minerals, because they contribute to the energy transition, I think the greener they are, the better they were, and they were more sustainable for the future. That's why we think that the new trend of mining methods, whenever they can be applicable, like the direct lithium extraction, using wells to extract minerals, can have much lower footprint and emissions than other methods. That's why we are, for example, a company, we are interested in these waves of technologies that can enhance not only our cost curve, but also the way that we produce and extract these minerals.
All right. So you're bringing us really to the stability of the chain and the stability of the business. But when we talk about resilience, Marc, Lucid has announced several agreements when it comes to critical materials.
Yeah.
So what is your strategy, your philosophy behind this? What kind of trade-offs are you trying to make?
Yeah, I think, Klaus, you just said that it became much more strategic and long-term. Up until recently, we would have looked only at the price. And now we're making, as you said, we have offtake agreements, particularly around graphite, for instance, that is years out in the future. And we will, we have discussions about lithium. We have diversified our magnet sources as well, which now, as a matter of fact, will cost us more. But if you could just go back last year, we had 2 instances, 2 times, where we almost would have stopped production because of having no magnets. And for us, although automotive is actually not a very high margin business, but if you can't produce, that's the biggest impact. And if you're paying a little bit more, it's not good, obviously, but we're willing to do this in order to have stability. So much more long-term perspective. Then the procurement team, together with our engineers, they come to me to take those decisions. It's not anymore done, somewhere on the lower levels in the procurement side. Then if it's a long-term topic and it might be a little bit more expensive, that's okay. If it's a very high risk commodity or something that we need in order to even continue to produce. There's a lot of changes that have happened. And I mean, some things we even stockpile, that we buy magnets as an example. Or when we talk about recently, as not necessarily minerals, but the semiconductor issue end of last year, we now really need to make sure that we keep our production running. So we are much more forward-looking, and it is definitely a C-suite discussion and decision right now. And we take and bite the bullet sometimes, where we pay more to make sure that we have the availability of those components.
Yeah. So yeah, I think we were trying to be practical, but what you're saying is like in today's world, to be practical, you actually need to think strategic. You need to have a long-term view to be today and tomorrow practical. Maybe, Joe, I will come back to you, because when you started your sharing, you were also positioning the role of the FMF and the forum here, people coming together to address certain challenges and to really find good solutions. So when we think about collaboration, when we think about cross-sector collaboration, public-private collaboration, where do you see that companies, stakeholders can be competitors competing for the same materials, versus where should they really come together and invest together, de-risk together? And what is stopping us from collaborating more? Because collaboration is like really the big word here, but like also everybody says it's so difficult. So what's your view on that?
Well, it really depends, right? So if you look at the public-private partnerships, the collaboration, and I mentioned that earlier this morning with the meeting with His Excellency, the Minister for Industry, this Future Mineral Forum has a fundamental task also for the future. Not just bringing people together who are of the same interest. It is about telling the global society how important minerals, mining, is for the greater good of mankind. Like AI, there is no AI without minerals, commodities. There is no going to Mars space without that. There is no next generation TikTok or all that great social media stuff without minerals. So we need to bring that connectivity from what people would like to have and to own because they feel good about it, to what it takes on the mineral and the mining sector. And that is a joint effort between the public and the private to bring the society closer to that relationship. Because if we need 5 times the mines in order to, to bring the electrical age, the fourth industrial revolution, men going to space, to the moon, to Mars, what have you, we need to have that connectivity for societal acceptance. And this forum here, is the perfect forum to get that started. Public sector, private sector. So that's one. Or the private to private sector, well, it's a complicated matter. Everybody is, jumping to, well, we need to collaborate, we need to work together. Well, if you are competitors, complicated. You need to see what is in for both parties. That's the central question on collaboration. Is it a scenario which we can create, which is of mutual benefit, or like the Chinese people typically say, win-win? Then it can work. If it is like, well, if I give you something, I don't have it anymore, it's never going to work. Could work short-term, but never in a sustainable long-term way. So at Daimler Truck, for example, the future of mobility could be diesel, could be hydrogen, could be battery electric. Nobody really knows at this time where this is going to go. But things will be changing at some point. So what we do together, we work on together with other competitors like Volvo or Scania and create a hydrogen universe. There we say, it's good for everybody to share the risk and the benefit and share the IPR. This works because everybody's got, benefit from risk sharing and benefit sharing. If it is a vertical relationship between supplier and customer, well, you need to see who is the best? Who is the best supplier? Because if you work with the best, you are safe. And then what interest do the suppliers have? Do they want to work with one or with more? And the third one, of course, is what will be the future of technology in that industry? Because maybe you don't need your supplier anymore tomorrow because diesel engines are no good anymore. So this all comes together, and this is what, what good management is about. Yeah. To sort of have a vision, have the right team, have the right people, and the right supply chain to figure out what's best for you. Yeah. That's how I would try to summarize it.
So on our objective to get win-wins, right? There is like many shades of gray. Let's maybe focus on
two things. Ideally, win-win. Both partners have a benefit. The other topic is a bit more complicated, and this is a subject of like push the stakes so high that neither party can afford to lose.
Yeah. Yeah. So maybe let's focus on the public-private win-win. Maybe Fadi, I come back to you because you have been navigating that during the development of AMIC, and how do you see also there like the enablers for more win-win in public-private, and how does it help your development?
Yeah. Specifically for titanium, it's a mineral, it's a metal that it has its own dynamics. And the relationship between the makers and the client or the market is really decided on based on few factors. As we know, the application really impact the industry, and the evolution of that specific space of industry, especially when you go into multiple clusters and multiple markets. So the collaboration part, we know that there are some limitations, natural limitations, especially when it is private to private. But for the titanium industry, we see that the government role is key into enabling the globalization. And this is how we were able to integrate the local titanium production in Saudi Arabia into the global supply chain. So there are a number of government agencies and ministries are working, supporting to leverage, the government-to-government relationship with other countries to ensure that there is an opportunity for those countries to source qualified titanium. Today, Saudi Arabia is the second largest titanium exporter after Japan to aerospace industry globally. And this is a big achievement. Yeah. And we can capitalize on that success. Now, we have to keep the support by the government to the infrastructure. And this is, a call to the government, infrastructure, ecosystem development, that need to continue in order to increase the trust, which is very important in this industry between the suppliers and the clients, because we depend on each other over the time when there are up cycles and down cycles. And we need to make sure that the flow of material continues and the flow of production continues, because that's what will make it survive at the end of the day.
Very good. It's a very exciting example of collaboration and of success coming out of it. We have only 1 minute left, but Klaus, I want to give you the last word on the topic of collaboration.
Yeah, I'd be happy to comment on those both aspects. And when Joe and I were at Siemens, we did actually partnerships with competitors, and from my own experience, I can tell you, I think the biggest hurdle for this is your own ego, right? Because if you run large companies, you think that you can do it on your own, and to realize the risk is too high, you need more juice behind it, and then to intertwine it in such a way, which you said, Joe, that everybody loses when you lose, or everybody wins when you win, But I think hindsight, I would say the biggest point is get your ego in check, and say, look, we're gonna go. And by the way, you see this as a huge trend in the Silicon Valley. when you see what NVIDIA and ChatGPT is doing, you know, they are building a whole ecosystem, and it's very hard to penetrate that. Very hard to penetrate that. So that's becoming a competitive weapon, you know. And on the public-private partnership, in fact, on the commodities industry, this is more the norm than the exemption, you know. So because, and I think for good reasons, because there are a lot of countries who say, look, I mean, I want the minerals, I want a certain control in it, you know, and therefore a mining license comes with an investment or some shares in addition, which I think is a pretty good model, you know, and on top of it, because you need a license, literally a license, you know, so the license comes from the government, it has huge impact also on the communities, huge, many ways also if things go wrong. So I think there have been many well-established ways, and then it goes back to the question of how stable is the government. You know? So we just had this discussion in a South American country that we've all probably listened to.
Very good. So thank you to all 5 of you for the great sharing. I think the only thing I want to say as maybe a summary of this, this panel is that none of the 5 of them are faint-hearted in their approach to this topic. And I hope also for all of you that you will use the words that came up, collaboration, innovation, to get to, as Joe, you were saying, like to get to these big 7X and other challenges that we have ahead of us. Thank you very much.
Thank you.
Thank you.